March the 29th, 2020. The world is a completely different place now that we have coronavirus growing at 660,000 people who are infected. It is the end of March. We'll see peak infections in May, peak deaths in July. What's going on with the financial markets? I don't know, but we can make money by the movement of prices. Prices are going to be moving. It is not immoral to make money from the price movement, but it is our job now to determine which direction is the price going to move so that we can make money and be here for our families. So it's a very important time to go through all of these and to pay attention to which direction things are going. Start off small because everyone's going to take bigger risks than they should because we're feeling the fear. So now it's a really important time to trade at half the size you really want to as a recommended risk control approach just for the emotional vibe of the whole world right now. As we are looking at this, now I am seeing the cross of the exponential moving average coming up, which gives me the bearish bias. At the same time, you know that I'm thinking that this is a pillar low. So I do think we'll be coming back to create an RSI pattern that is a bullish divergence, which will require prices coming back a little bit and the RSI really pulling back while prices really torture us, hopefully, and that we're going to be bouncing up higher. If not, then we really have to pay attention to these top formations. This is an exhaustion candle in here, and this is a top formation that when that line breaks, we are still trending down. So this line break is important for determining that this is a bear flag in the downtrend, that it's going to be cracking sharply and quickly lower from here should we go. And as we zoom in on the 12-hour time frame and the 4-hour time frame, what this does for us is gives us a clearer spot to make that determination of dumping and breaking, or is it going to super oversold conditions when we only come down to here? If it goes deep into oversold conditions when we only pull back down to there, that's a very bullish divergence above our base 1, 2, 3 and this pillar reversal right there that we'll see in the weekly Bollinger Bands in a second. So this level right here is going to be tested. And I hope that what is this time frame? 4-hour relative strength index is dipping way down as we are only at these levels. That would be a bullish scenario. And we should see it in the volume here in the weekly time frame. In the daily time frame, there's some good volume there. This was an important movement so long as it holds and doesn't keep fading off here as we're going in. So it is fading off and coming to dump territory. So now it's a matter of watching it as we're coming back to that key level here, if I could do a straight line, to see what it is actually doing right at this moment. How deep is it going to be? And so if we are getting this kind of depth and we're pulling back and it looks really scary, but it's not nearly as deep as this was, okay, that's fitting in well, and I hope that the RSI is doing what we're looking for. Now, as we go into the MACD indicator, the weekly is negative. The histograms are growing more negative, like they're growing bigger, which is a continuation of the bearishness. And our EMA is really very close to crossing. Let us zoom in. The 10 on the daily time frame, it is easing off on our histogram, losing power, slipping. If this crosses as we're touching these levels, it's still not confirmation, but we have lower crosses is bearish for sure, and the continuation of the trend is very likely because we do have the cross of these EMAs, which gives us the trend. We see how far apart these are. We'll see if we are at the peak distance apart right now as we are coming into the closer time frame. So now it is crossing to the negative, which is giving me the feel that it's going to be coming back from here. We've got negative crosses along here. It's not giving us a bullish divergence, and it's not giving us the bullish divergence that we saw building up here. It took a long time. What was that? 6 weeks, another 2 months of sideways just to fight it out between these ranges right now. And this could oscillate a lot in between those ranges. So let's zoom into the 4-hour time frame to see how this oscillation is playing out. as we are going parallel arms down, and this red histogram is staying below the 0 level. As it gets deeper red, that's more bearish. And if this time frame catches itself and crosses positive and the histograms turn positive as we are coming up at any time it does that, that's what we're watching for now, especially if we do get that pullback to these levels. The RSI is super oversold and this starts to cross at the moment. That's when we're going to be watching for the Bollinger Bands to give us a mean reversion buy signal. Now, in the Ichimoku cloud, we are still below the cloud in the weekly time frame. That's bearish. On the daily time frame, oh, that blue is coming very close to the red right there, but nothing doing for bull. The 12-hour time frame is sort of giving us that tease both ways, and it will be a sell signal in the Ichimoku downtrend if that blue line crosses below the red. That is the Ichimoku sell signal in the downtrend. When we come into the cloud and those two lines, the baseline and the conversion line, cross back and forth like that, that's the signal. So here in the downtrend, as those blue and red lines crossed, that was the signal. There's the signal. There's the signal. So let's zoom in now to see what the 4-hour time frame is telling us about this, because it's already given us the sell. It hasn't crossed negative. Our trailing indicator is starting to cut through everything. So breaking below that cloud is a sell signal. And I've been in denial about this before and talked all bullish about what we could be seeing for the next wave up. But then Ichimoku cloud kicked my ass when it was doing exactly this. So the 12-hour is coming up to a sell signal. The 4 hours already giving us the premonition of it. Let's hope Bollinger Bands can save us. Bollinger Band weekly. Here is that, what I call the pillar bottom. That reversion outside the third standard deviation only happened 3 times, twice before and then just now. So here's the first time that it actually happened, that we went outside that third standard deviation. And it was a very painful summer throughout 2015 until this breakout of the longer 1, 2, 3 bottom formation. A lot of mean reversion trading throughout this period of time on the shorter time frame. And that's actually what I'm kind of really expecting now. A lot of difficulty. Who knows? With coronavirus coming up, we don't know. But what we're looking for is direction, because that's how we make money. So, daily time frame. What are we doing? I like this mean reversion. If we are going sideways, then we're going to go from top to bottom, top to bottom, top to bottom, and mean reversions are going to be the only thing that makes sense. So as I go into this, I'm still watching and looking every time we come to a peak. Did it go outside of those standard deviations or not? And then we go into the 4-hour time frame. We are coming outside the standard deviation, but we're holding above that level. It still could be a mean reversion, but it's looking weak. We've got these 4 bands are pointing down on a trend-ish rather than holding and narrowing as though we're going to have a big move. So we did have the narrowing and we did have the big move. Here we had the narrowing and the big move, the narrowing and the big move. It's a top formation. We have exhaustion wick and a mean reversion off of this top, and that top. Bollinger Band is also saying that we're probably going to be coming down further. And the only thing that as a bull wanting to trade, the long-term bullish is that I wanted to bounce off these levels, give me a 1, 2, 3 formation, which would complete a larger 1, 2, 3 for us. And that would give us a really good bullish turnaround. Now, the other part of me is wanting to trade short here and get out here. Go long here, get out here and go short. Go short here and get out when it hits the stack. And just trade these rather than trying for the trend, because I don't believe that we're going to be getting a bull trend. The exponential moving averages are not in our favor. We've just hit a pillar bottom, and I don't think we're going to be bouncing straight up off of that. The economy of the world isn't going to support that. I don't see it. If all of the other money is disappearing, there's no money to pump this up with. I don't know. We'll prepare for the trend and we'll be ready for it. One thing that I'm doing to prepare for the trend is to really keep a close eye on what's going on with the altcoins. We've come down to neutral, but we bounced off of near fail and we've come back up to a more neutral stance. Even though we're in this circumstance, and I am feeling bearish in everything, when I'm going through the charts, I can't help but notice the patterns that I look for as bottom formations that I want to be prepared for. And so we've put all of this together as an automated system over on Signally with the Bull Market Watch Diversified Binance High Cap Portfolio. This is like having 50 bots in one. It's going to watch all of the different coins, and when the exponential moving average crosses over on the 12-hour time frame, we're going to play a very small position with the assumption that over time we're probably going to be getting into as many as 130 different coins all at the same time. And so we're really doing it small trades, doing it wide for the whole market, and automating it so that we just, if it goes, we just get in and we don't try to double think it. Thanks again for tuning in. I want to keep this short. Stay healthy. We'll see you in the next video. Bye for now.